You know, if you currently have any outstanding balance on any credit card, the best thing that you can do financially is get rid of it. Pay off your credit cards. This is because of a number of reasons. The first reason is that you're probably paying a very high interest rate on your credit card, probably about 18%, maybe even more. If you're paying that much on your credit card, it means that all of that interest is going towards profits for the bank, not profits for you. So as soon as you eliminate paying that interest, it means that you will get the profits for yourself. So a return of 18% is a great way to start building your own financial reserves instead of building the financial reserves of the banks and the lenders. The other thing is that the way credit card interest is calculated is quite different to the way that interest is calculated on mortgages and home loans and personal loans. You see, the way that credit card interest is calculated, you could pay everything that you are asked to pay, the minimum payment. You could never spend another dollar on your card, and you could, even without getting fees and charges added to your card, you could still be paying off that credit card in 100 years' time. That is seriously true. Even if you are a great payer and you pay exactly what they ask you to pay, and you're never a dollar short, you're never a dollar late, and you don't get charged any fees and charges. If your balance is about $7,000, which is the average credit card balance in this country, the credit card debt is going to live longer than you. So the first strategy is stop spending. Why? Because you don't want to make things worse. They're already bad enough. They don't need you to make things any worse. So stop spending on your credit card. Make it a decision, a quality decision that you will stick by, that you will only pay cash for things or pay FPOS, but don't put anything else on credit. You can also ring up your lender, whether it's Visa or your bank or whoever, and ask that they do not charge you any fees or charges. Do you know that most lenders, if you ring them up and ask them, they will reverse the fees and charges that they've already charged you, or they will stop charging you those fees and charges for the year to come. Now, you may have to ring up every year, but one phone call is worth it when you are saving at least $30 these days for a card fee. Possibly if you've got rewards points and things, it could be even more. So ring up and ask if you can have no more fees and charges on your card, at least for this year. And most lenders will do that for you. Also, you can shop around. Some of us don't even know what our interest rate is that we're being charged on our credit card. But get out your statement and have a look. It's probably around 18, 19, 20, maybe even 22% on your credit card. Ring up other lenders and ask them what they are going to charge you. Or surf the net. Have a look on different websites and see what are the deals at the moment. You may be able to lower that 22% down to, say, 9% or 12%. A massive, massive reduction, which means that all of that interest you get to keep in your own pocket instead of paying to the lender. Other strategies include doing a balance transfer. This is when you take the debt that is on one card and you put it onto another card. And you think, well, why would I want to do that? How is that going to help me? Because often the lenders value new customers more than their current customers. And so what they will do is, for a limited time, sometimes 6 months or 12 months, they will give you 0% interest on any balance that you transfer from another card to them if you're a new customer. Now, obviously, 0% interest means that you aren't paying any profits to the lender on that money that you've already spent. Every part that you pay off your card goes towards reducing your debt. It doesn't go towards profiting the lender. So balance transfers can be great. And you don't have to just transfer the balance from one card to another card. If you've got multiple cards, you can do what's called debt consolidation. And this is where you can take 2 or 3 or however many cards you have and put them all onto the one card. Even better if you can get that 0% debt consolidation rate. But that debt consolidation means that it's easier to manage. You'll only have one due date, one minimum payment to make, and you'll get one bill. So you'll know exactly what your balance of credit cards is. But also, if you're paying fees and charges on all these different cards, by consolidating it into one debt, you will save all those different fees and charges and only have one fee. And if you ring her up, remember, you may even get that one cancelled. So there are lots of different ways of helping you get out of credit card debt. If you'd like some more strategies on exactly how interest rates are calculated and the best card to pay off first and how to get out of debt the quickest with your credit cards, then please contact us at the website. I'm Sharon Hay. Thanks for watching.